Hey everyone, Aditya Borde here. Welcome back to another video on the channel. Today we are going to take deep dive into IREDA's Q4 and full year results for FY25. For those who aren't familiar, IREDA, Indian Renewable Energy Development Agency, is a key player in India's renewable energy financing space, and their recent numbers tell an interesting story. Recent stock performance. Before diving into the numbers, let's address the elephant in the room. IREDA's stock has taken a significant beating, currently trading at around Rs 167, which is down nearly 45% from its all-time high of Rs 310. This downtrend is something we need to keep in mind as we analyze the results. Q4 FY25 financial highlights. Let's start with the quarterly performance. Revenue from operations reached Rs 1,904.15 crores in Q4 FY25, up 12.1% from Rs 1,698.45 crores in Q3 FY25. Year-on-year growth is even more impressive at 36.86% when compared to Q4 FY24's Rs 1,391.26 crores. Profit before tax stood at Rs 629.98 crores, showing solid growth from Rs 538.20 crores in Q3 FY25. Profit after tax came in at Rs 501.79 crores for the quarter. The interest income, which is the bread and butter of IREDA, reached Rs 1,861.14 crores this quarter, driving the bulk of the revenue. Full year FY25 performance. For the full fiscal year, the total revenue was at Rs 6,742.41 crores, a robust 35.8% jump from FY24's Rs 4,963.93 crores. Profit before tax for the year was Rs 2,103.80 crores, up from Rs 1,685.25 crores in FY24. PAT for FY25 stands at Rs 1,698.60 crores, showing strong bottom line growth. The full year performance reflects a strong top line and bottom line for IREDA. Now let's look at the key performance metrics. Some important metrics to highlight. Loan book has expanded to Rs 76,282 crores from Rs 59,698 crores in FY24, a 27.8% growth. NIM has improved to 3.27% from 2.85% in FY24. Cost of borrowing has decreased 7.61% from 7.81%, helping to boost profitability. GNPA, that is gross non-performing asset, stands at 2.45%, slightly better than Q3's 2.68%, but marginally up from 2.36% in Q4 FY24. Net non-performing assets is at 1.35%, down from 1.5% in Q3, but up from 0.99% in Q4 FY24. Now let's break down the loan portfolio of IREDA. Looking at the loan allocation, 24% is allocated to state utilities and GENCOs, 24% to solar projects, 14% to wind projects, 11% to hydropower projects. Other renewable projects make up the rest. 73% of this loan is given to the private sector, while 27% goes to the public sector. 27% of the loan book is allocated to the public sector. Now let's break down this 27%. This 27% can be divided into two parts, 24% and 3%. 24% is allocated as loans to GENCO and state utilities. Only 3% of total loan book is lended to PSU for power projects. This is a little bit concerning. Concerns and risk factors. Now let's address some concerns. Number 1. Institutional investor exodus. FII holding has dropped from 1.85% to 1.75%, which was at 2.02% in Q2 of FY25. Mutual funds have also decreased their holding from 0.28% to 0.23% in this quarter. Insurance companies have decreased from 0.3% to 0.27%. This indicates the big players are selling. Exposure to loss-making entities. 24% of IREDA's loan book is allocated to Gencos and state utilities, many of which have poor financial health. This represents a significant credit risk. No dividend history. Despite being a profitable Navratna company, IREDA has never declared a dividend, which doesn't inspire confidence for income-seeking investors. Potential impact of Trump tariffs. The recent market turmoil due to Trump's tariff policies could continue to affect Indian markets, particularly in sectors like renewable energy. Growth catalysts and future outlook. On the positive side, India aims to increase non-fossil fuel energy capacity from 220 gigawatts to 500 gigawatts by 2030. This ambitious doubling in just 5 years positions IREDA as a key beneficiary. Improving operational efficiency. The decreasing cost of borrowing and improving NIM indicates a better operational efficiency for the company. Navratna status. As a Navratna PSU, IREDA enjoys government backing and could play a central role in India's energy transition. Conclusion. IREDA presents a mixed bag. Strong financial performance with solid growth in revenue and profitability, but concerning institutional selling and exposure to risky sectors. The future growth potential tied to India's renewable energy ambitions is undeniable, but execution risks remain. What do you think about IREDA prospects? Do you believe the current price offers a good entry point, or there are too many red flags? Let me know your thoughts in the comment section below. If you found this analysis helpful, please hit the like button and subscribe to the channel for more such content. Also, don't forget to hit the bell icon to stay updated with all our future videos. This is Aditya Bode signing off. Until next time, happy investing.